Good evening and welcome to GST And You, which is part of ET Now's comprehensive and exhaustive coverage of the impact that the new GST regime will have on all nooks and corners of India Inc. As India Inc. and of course the members of India Inc. are grappling with the new GST regime, we decided that over the course of the next half an hour, our star-studded tax panel and of course two very special and senior officials from the government will clarify some of the biggest concerns that are in fact grappling as far as India Inc. is concerned, and of course some of these concerns will be clarified by our panel, and our panel will also pose these questions to the two senior government officials who are there joining us live on the show. So without further ado, let me welcome our three tax experts. We have Sandeep Chilana from Shardul, Amarchand, Mangaldas, Pratik Jain from PwC, MS Money from Deloitte, and from the government side we have Mahajan, member CBEC or the Central Board of Excise and Customs, and we also have Ravneet Khurana, who is the Joint Commissioner of the GST. Gentlemen, to all five of you, thank you so much for taking out time and joining me on this special edition of GST And You. I'll start off with Pratik. Pratik, as far as stock is concerned, that is something that has bothered dealers as well as retailers and also manufacturers as well as importers. So what do you do with your stock? And the government has allowed an increase in MRP. How does it work out in the GST regime? I believe you have a specific question on that.
Yes, so I have a specific question, and first let me compliment Mr. Mahajan and Mr. Khurana. I think the government outreach program has been excellent. And but my question on the MRP thing is that can I increase the MRP for the product which is lying with the retailers? And if I can, which is the interpretation which trade is taking, then how do I do the stickering? Can I send the stickers to the retailers and dealers, or will I have to take the physical stock back and do that as a manufacturer or as an importer?
Mr. Mahajan, if you could take that question from Pratik.
Yeah, Pratik, issue has already been, we will be coming out with a press note also on that. In fact, whenever you are going to increase your MRP for whatever reasons, maybe due to tax change, first of all, I would rather say that in most of the commodities, taxes should be going down in a way. But if at all there is a reason for increasing the MRP, then there is a procedure which you have to follow. You have to add in the two papers that you are going to increase the rate by such and such percentage, and definitely then you can send the stickers to the retailers and it should be clearly visible, the second sticker along with the earlier sticker, so that people know that there has been change in the MRP. So there is a procedure available already. You can always do that.
So those are preliminary comments coming in from R.K. Mahajan, the member of the CBEC. Mani, now I'll toss it on to you. You have a very interesting question, and this is of course, what will happen to the status of existing disputes and assessments? How will the new GST regime take them forward? Mani, you can ask this question to Ravneet, Mr. Ravneet Khurana.
Yeah, Mr. Khurana, pleasure to meet you again, sir. So the question that I have is a little different from GST, but it is intricately linked to GST. And the issue is like this: most of the existing dealers, manufacturers and service providers have a lot of issues with respect to excise and service tax and VAT. Similar to what many other countries have done when they moved toward new tax regime, is there any proposal underway where you would be setting some kind of a timeline to cover all the existing disputes and existing assessments? Could be 1 year or 2 years or so that possibly you set up fast track courts and complete all the existing matters much before people forget the existing tax laws.
Mr. Khurana, Mani is referring to the pendency of cases. What's the government take, and how is the ministry going to look at this in the days to come?
Yeah, well, the government as well as the taxpayer, I believe, both of us want to start on a clean slate. So whatever the pendencies, especially the disputes which are already there in existence, we would also like to clear them up as early as possible. But to say that there will be a defined timeline, to say that it will be completed in 1 year or 2 years, That might be a little bit difficult right now, but of course we have started such projects. We have asked the CBEC team officials a project 0, whereby we are focusing on finishing off all the disputes which are in existence right now, either in excise or either in service tax. So the government is also very much committed towards early resolution of the disputes which are there in existence right now. And that will be helpful for the government also as well as the taxpayer.
Khurana, now, Mr. Mahajan, before I move on to Sandeep, Chilana, I have a question for you, and which is, can representations still be made to the sectoral task force, Mr. Mahajan? That's something which India Inc. and tax experts are curious, or are the doors closed?
Doors are never closed. You see, sectoral reports are basically whatever FAQs which have come, and wherever we have to provide the guidance to a particular sector. So they have been taken into account, the general questions which are raised hitherto. It is not that there is an end to the sectoral report, but any report which has to come, it has to come within a timeline. So these reports, most of them have already been completed, and a few are left out. But definitely the suggestions from the trade and experts are always welcome, and whenever such comments or advices are found okay, we can always include these things in our additional or addendum to our sectoral reports. Now, can I flip back to the question which you have put to Khurana, because there is something
Please,
I would like to add to that also.
Please, Mr. Mahajan, if you have a follow-up answer to any of the earlier questions, please feel free to add your perspective to them.
Yes. So, so far as the sectoral part is concerned, I have already told you, it's not at the end of the game. We can always improve upon it, and it's an ongoing process. Now, about what Khurana has already informed you about various ongoing assessments or ongoing disputes, definitely government does want that they should be completed within some time frame, always, because it is every case, every assessment has some revenue tagged to it, and revenue generation is one of the processes where government would like to have it as such as possible. But as he rightly pointed out, it is very, very difficult to put a timeline to it, because the processes not only remain within the four walls of the government offices, but also go towards the courts. They are in the High Court, they are in the Supreme Court. So these things do take time. We are trying to tag all the similar kind of cases and try to seek time from the court so that at one go these can be disposed of. So these are the efforts we are trying to make, and I hope that in near future these bear results also. But definitely we have also, as he rightly said, Project 0. We'll try to see as fast as we can, possibly we can finish our adjudications. The targets have been given to the officers. That's what I'll just mention about that and add to what Khurana has said.
Right, Mr. Mahajan. So the message from the government, at least from the government officials on this tax panel, is that it's very difficult for the government to right now give a specific timeline as far as resolution of disputes is concerned, but they continue to be accommodative, and representations can continue to be made, and that's been, of course, a hallmark of this government. They've always kept all stakeholders in the loop. Without further ado, I also want to now rope in Sandeep Chilana. Sandeep, over to you. What's your query? You can pose it to Mr. Khurana.
Sure. First of all, I would like to echo the sentiment of Pratik with respect to the commendable work which the government and your good offices have been doing. Now, coming to a very specific query which I have, and it is a little technical one. Now, under the GST regime, there is this concept of inter-office services where one distinct person is required to raise invoices on another distinct person, and I am talking about different branches of the same company in different states primarily. Now, the first question is whether the common functions such as HR, IT, finance, with respect to these, the head offices, do they mandatorily need to raise inter-office invoices? And the understanding which is coming out is yes. If the answer is yes, what happens to those sectors which are non-taxable or exempt, specifically say liquor sector or petroleum, or say books, for example, which are exempt? In those cases, what would be the valuation of these services, and whether by applying the open market value rule, the cost of employees would also have to be added while raising such invoices?
Mr. Khurana, would you like to address that query? Quite a comprehensive one coming in from Sandeep. Over to you, sir.
Yeah, thank you. Well, we have to understand one thing, that why we are dealing with interstate stock transfers, whether in the context of goods and the services. GST is a destination-based consumption tax, and tax has to flow along with the goods or services to the final point of consumption. So that's why we are taxing now the interstate stock transfer, whether in the context of services. So what is happening now in the context of the services, especially when we are talking that the headquarter is providing some service to a branch or a distinct person, and since there is a state-wide registration, so of course for the GST purpose even the branch will be separately registered. So whenever the headquarter is providing any service to the branch, it needs to be valued and thereafter taxed accordingly. The government is aware of this concern of the sectors, that how to value this. That's why if you look at the rule 2 of the valuation rules, now further transformed into the CGST rules, we have very clearly provided that where the recipient, who is a distinct person, is eligible for availment of full input tax credit, there in that scenario, whatever the supplier declares, the value will be accepted by the government. So that will be the value for the invoice. So I don't think there's not much concern about this until and unless the eligibility of input tax credit is not there. And even if that is the issue, I believe cost plus method will be very comfortable for the concerns, because at the end of the day, each branch is a cost center or a profit center for the headquarter. So they must be doing it for the accounting purpose already.
So clearly Mr. Khurana is saying that there's not much to fret or worry about until and unless the eligibility of income tax credit is not there. Sandeep, I hope that satisfactorily answers your query. I'll now pass it on to Pratik. Pratik, you have a specific query on SEZs or special economic zones. Go ahead, Pratik.
Yes, thanks. I just had a follow-up. I mean, just a small one Sandeep asked. That, sir, there is a lot of confusion in this, that whether head office services are to be charged to tax to the branches or not. How do I determine? Because a lot of people are sitting at head office, my CEO, my CFO, are they providing services to different branches, or are they providing services to the company itself? Right. So I think some bit of clarification or guidance on this would be very helpful. My question is on special economic zone. Supplies to SEZ are zero rated. Now earlier there used to be a particular form A1, A2, etc., which I had to get from the SEZ to establish that I am providing services to them. Now such forms are not there. The service provider instead has to do a bond or a letter of undertaking. So just wanted to understand that is that what the government is thinking, that there will be nothing which I will get from the SEZ, and I will in turn as a service provider do a LUT or the bond before I provide the services to SEZ.
Mr. Mahajan, would you like to offer some clarity on this query coming in from Pratik Jain on the whole SEZ issue?
Let Khurana answer this.
All right, sir.
Let Khurana answer this.
All right. So Mr. Mahajan wants the question to be answered by Mr. Khurana. Mr. Khurana, could you address Pratik's specific query on SEZs, please?
Well, if you look at it, when we're talking about the bonds and we're talking about the forms and everything else, we are going away from that concept. If you look at it, the requirement of the bond and the requirement of the forms is no longer there in the context of GST. Even in the present service tax regime, when we were talking about distinct persons, the concept was still there. So in the GST, what we have done is further transformed a pan-India network into a state India network now. So registration is state-wise, and thereafter the distinct entities are state-wise, and requirement of form is not there. In fact, I want to be very categorical on this, that the government is also very much concerned about this aspect, that how to value these kind of distinct services between distinct persons, especially when the employee is working at the headquarters and providing different services to the various branches. And I believe the industry can come forward as a partner in this concept of valuation. And if industry-wide practice can be informed to the government, especially when we are preparing the guidance notes on this issue, I think that would be very helpful as it matter.
Sure, Mr. Mahajan. In fact, Mr. Khurana. Now, Mr. Mahajan, before I move on to Mr. Money, I have a query, and this is something that is keeping many tax experts busy. They want to know, is there any clarity on when invoice data uploading will begin on the GSTN? A. And secondly, there are dealers who have turnover below 20 lakh rupees, Mr. Mahajan. Now, they can't do business on online portals like Amazon without mandatory registration. So, there is a school of thought which believes that this is an additional and discriminatory burden on unregistered dealers. Your thoughts on these two aspects, Mr. Mahajan?
Okay. You see, so far as the first issue is concerned, already it has been decided that 2 months time lag has been given, that all these invoices to be uploaded by the GSTN. So it has already been postponed by 2 months or so. And about your second query, as of now, what law says is what you are saying. They are not supposed to be, even though they are below 20 lakhs, they are supposed to take registration. So that is what the law says. Now, in case you have any issue, specific issue, and if you want to still address it, you can, the persons or the association can send us a representation. We'll have a look at it. But as of now, the law stands is that yes, the person has to take the registration. That is what the law is about. Okay.
No compromises on that front. That's the message coming in from Mr. Mahajan. Money, we all know about the Authority for Advanced Rulings. It's had its fair share of ups and downs. I believe you have a specific question on advanced ruling applications under the GST regime. Please go ahead, Money. You can pose that question to Mr. Khurana.
Yeah, thanks, Ashwin. Khurana Sahab, the question is actually very simple. Advanced Ruling Authority has actually been beefed up even in the earlier Union Budget. So, in Union Budget 2017, we had seen that the Advanced Ruling Authority was made a much more robust body capable of handling many more cases. And the GST legislation is one area where many companies really have a confusion in terms of what they could do. It could be in terms of classification, it could be in terms of valuation, it could also be in terms of time of supply also. Now, many companies are waiting for some kind of an announcement on when the window for submitting applications to the Advanced Ruling Authority would commence. Would you be able to give us some insights in terms of how it would work?
Mr. Khurana, over to you, sir.
Yeah, absolutely. When we talk about the advanced ruling, you must be aware the objective of the government is to provide a clarity to the businessman when he is starting a business earlier. But now the expanse or the scope of the advanced ruling has been further expanded. Now anybody can ask any question, especially even the current businessmen who are already operating. And secondly, we have done is we have brought the advanced ruling authority to the state level now. Each and every state is going to have an advanced ruling authority. Yeah, the question is right that what is going to be the timeline by which the advanced ruling authority is going to be operational. I can assure you on the behalf of the government that we are going to make it operational very soon, so that the concerns of the taxpayer which are in relation to the classification or the input tax credit or the concept of supply can be addressed. And for that also, learning from the experience of the past authorities, what we have tried to do is we have tried to incorporate the officers involved in the process so that they can become the officers for the advanced ruling. This will help us in keeping the decisions faster and quicker, and more importantly, give us a practical viewpoint towards what the problem the taxpayers are facing. So you might expect very soon the announcement for the purpose of advanced ruling authority.
That will be music to the ears of the taxpayers as well as the entire tax community. So Thanks a lot, Mr. Khurana, for throwing some light on that. Sandeep, I believe you have a section, I believe you have a question specifically under section 140, which allows transition credits to traders and distributors. Go ahead. I believe it is about the ambit of that section and, you know, who's eligible, who's not. You can pose that question to Mr. Mahajan, Sandeep.
Absolutely. See, effectively, my specific question is, while the understanding of the trade as far as the dissemination of information from government is also concerned, is clear that all traders and manufacturers are eligible for the transitional credit or deemed credit benefits which are granted under section 140 of the CGST Act and the corresponding state GST Acts. The only confusion and the possibility of litigation which I see is that the section uses a word, the dealers who were unregistered or taxable persons who were unregistered under the existing laws. And the way the term existing laws has been defined, it says any laws under which any taxes or levies or duties were collected under the earlier regime, which would also obviously include the Central Sales Tax Act. Now, if any person who is registered under the Central Sales Tax Act as on date becomes a registered person and is outside the ambit of that unregistered person to whom this 40%, 60% scheme is being granted. Now, I understand the intention of the government is very clear, but to that extent I believe that there is some confusion in the law, and that should be clarified in order to avoid any disputes in future.
Mr. Mahajan, would you like to take that question? Sandeep is of the opinion that this is vulnerable to litigation. Do you concur?
See, what I suggest is that whatever doubts he has raised, I will rather suggest that he can put it in black and white and send it across to us, because you see all these clarifications need deeper examination. It will not be appropriate for me to respond to this immediately, but whatever concerns he has raised, definitely will like to examine and then respond to this. Okay?
Point taken, Mr. Mahajan. In fact, we have time now for one last query, and I'm going to leave the last word to Pratik Jain. Pratik, since Sandeep spoke or touched upon the possibility of litigation, is there any particular grey area in the existing GST regime which you personally feel could throw open the floodgates for litigation, which of course the government would want to avoid, the SSCs would also want to avoid, and as both our government officials have been pointing out, that it's not just something that has to be done by the government, the responsibility also lies on the SSC. People have to work together as a team. But in every new existing law, there's always the scope of some grey area which can be used as far as the potential for litigation is concerned. Pratik, would you want to point out any one area? We don't have too much time left on the show, so one specific area.
I have more than one, but I'll put one. Sir, there is a rate of 12% GST which is there for temporary or permanent transfer of IPR, which is intellectual property services. Now, things like trademark, copyright, goodwill, etc. have been held to be goods under the earlier laws. Now, there is a confusion that when I transfer a trademark or a copyright, because these also are IPRs or IPs, will it be taxable at 12% or will it be taxable as goods under the residuary rate of 18%? So, any guidance on that would be very useful.
Mr. Khurana, could you provide some guidance on Pratik's question?
Well, you look at it, I think the answer lies in the question itself. When we are talking about the fact that trademarks, copyrights have been described by the courts as goods, then whenever we are transferring the goods, we should look at the perspective of the supply now. If the supply is of the goods, I believe the tax rate will apply accordingly. But on the other hand, if we are talking about leasing or just, transfer of the right to use the intellectual property rather than the property itself, I believe it will be transferred in the concept of service then the tax rate will apply accordingly.
All right, Mr. Khurana, thanks for addressing Pratik's query. With that, we have completely run out of time on this special edition of GST and You. Over the course of the past half an hour, we have tried our level best to address several queries that are keeping India Inc. Occupied, that are keeping tax advisors like Sandeep, Pratik and Mr. Mani occupied. And I must once again extend a special thanks to both the government officials who have joined us to address some of the major concerns of India Inc. To both Mr. Mahajan and Mr. Khurana, thank you so much for taking out time, and thank you to the remaining tax panel as well. Stay tuned to ET Now for more news and updates.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.